Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra.
Hello and welcome to Kitco News at the BMO Mining and Metals Conference in Miami. With me, Paul Harris. Today, we're talking about gold, and first I'm joined by Clive Johnson, President and CEO of B2Gold. Good morning, Clive.
Hey, Paul. Nice to be with you.
Good to see you again. B2Gold came off, put in a very strong and solid 2021, about a million ounces consolidated production at an all-in sustaining cost of $900 an ounce. You must be very pleased with that performance. What were you most sort of happy about there?
Well, I was pleased with, once again, our ability for the 13th year in a row to announce record gold production for 13 years, which is quite remarkable, and our unprecedented growth as a gold producer over that time. But I think one of the things we're most proud of is our ability to do what we've done and do it during COVID and really relying on the hard-earned social license that we have all around the world on our sites by having such good relationships with local people and government and making sure that everyone realizes that this is a win-win proposition. So there was a lot of trust amongst ourselves and our employees and the governments in the countries we work. So when COVID hit, we all had something in common. We wanted to keep gold mining. It's critical for these countries, but only if we could do it safely and only if we could help them deal with COVID. So our accomplishments, I think, are quite, speak for themselves, but doing it all during COVID, I think really underlines our capabilities and our trust that we have with our employees, which is partly what this is all about. So we're very proud of what we've done and we're excited about where we go from here.
Well, thank you. Congratulations once again on that. It's an interesting time in the gold sector. You know, the gold price has gone back over $1,900 per ounce on some geopolitical events in Ukraine with Russia. How do you see the gold price playing out, and what's your evaluation of how the gold sector has reacted to this event in Ukraine?
Yeah, well, I've never, in all the years I've been doing this, whether it was Bema Gold before and the B2Gold for the last 14 years, we've always been very disciplined about our view on the gold price. In other words, we don't want to be in a situation where you need gold to go higher or to find more ounces to justify an acquisition, for example, that you've done. We're not gold bugs. We don't believe gold has to go higher. I don't think if I'm owning shares in a gold mining company, I don't want the CEO to be a gold bug who's going to say, well, I'm going to do these acquisitions. They may not be great today, but don't worry, gold's going higher. That's a fool's game, and that's how companies get in a lot of trouble. That's why we're here and we've succeeded so well. Discipline in every way, including our view of gold. I think a lot of us, to be honest, we're a little disappointed when you look at gold in US dollar terms that it hasn't gone up more given this crisis we're seeing, which normally makes people fly to safety, such as gold. Flight to safety. But I think it's a delayed reaction often. I do think that there's long-term impacts that are going to make people want to own some gold here, given everything that's going on, including the tragedy that's happening in the Ukraine. Obviously, we'd much rather not have things like that and let the gold price float where the gold price will go on supply and demand. I think that there's a good argument for gold maintaining these kind of levels or maybe continuing to move higher. We don't need it. We don't bank on it. When your own sustaining costs are $900 to $1,000 an ounce, all-in cost, debt-free, paying a large dividend, and the ability to grow this company because of our financial strength and our abilities, we're fortunately a little bit ambivalent about the gold price, which is a very nice place to be as a gold producer.
Okay, well, let's go a little bit more into that. You know, gold has been at $1,800 an ounce, a good historically healthy level for quite a while now, but yet there's been a disconnect with some of the share prices and the mining companies. The issue is why do you think that is, and what will it take for the mining equities to catch up with the gold price?
Sure. Well, if you go back to a year and a half ago to August 2020, our share price hit $10 when gold briefly touched 2,000. And since then, the market disappointment, when gold dropping from 2,000 back to 1,700, 1,800, you'd almost think gold dropped to 1,300 given the reaction in the gold equities. But that's what happens in markets. They make these big swings. So the whole sector became out of favor after that time when gold dropped below 2,000 and continued down for a while. So the sector became out of favor and money left the gold space. So you saw the sector was down around 25% for 2021. We were down 50% at one point at the end of 2020. But that's because we had this problem in Mali, which we resolved, which was a dispute over an exploration license, which we resolved amicably with the government. So it's actually a win-win for everyone. We were able to resolve that problem. So we got hurt more than the sector, as much as 50% at one point in time. Now we resolved the issue, and now I think we'll start to recover. But we got caught up in the overall, when gold's out of favor, or at least when people are just supporting gold, they hit the equities really hard. That's what happens. But at the end of the day, it's a marathon for us. It's a long-term game. Markets will take care of themselves. Ultimately, equity markets will take care of themselves. We just got to keep doing what we're doing and keep telling the story about. I don't tell people you buy gold, you buy us B2 Gold because you think gold's going higher. I say you buy B2 Gold because you might want some gold exposure. But basically, we're an incredibly well-run company. It doesn't matter whether we're making widgets or producing gold. We're very good at what we do. We're good at finding more gold. We're good at building new mines. We're very profitable. If you said 5 years ago that a company like ours is going to pay a 4% dividend, you would have been laughed out of the room. Gold mining companies historically have not paid a dividend. We're able to do both now. Continue to grow the company because of our great financial position, no debt, but also pay this dividend. So we're in some uncharted territory, but in a positive way. We can say to people, ignore the fact we produce gold. You buy our shares because if you bought them 10 years ago, you're up 1,600%. 1,600% if you bought us 10 or 12 years ago. We can think we're going to grow the company, irrespective of the gold price. That's our pitch, and I think it has more credibility now than ever.
Okay, with that disconnect in the gold price, a lot of market commentators say a lot of good quality mining stocks are very undervalued. Mm-hmm. Does that? But there also is a lot of good cash flowing companies out there. So does that create a good situation for M&A? For people to buy good assets at a discounted price. You've obviously built B2 Gold with some very astute acquisitions over the years. So is this potentially something you're looking at again?
It is, for sure. I think it's important to remember that have always been prepared to be contrarian, and last 4 or 5 years, we were quite contrarian in the sense that we were acquiring things and building mines when it was so out of favor 5 years ago when we acquired Papillon that had the Fekola deposit. There was no competition for this really good project in Mali, and there's a lot worse places to be than Mali, as we touched on. But we're M&A, we did it when no one else was doing it, and we benefited hugely from that. So we got some good assets at reasonable prices, both in Namibia and also in Mali with Fekola. Today, and those acquisitions have turned out to be tremendous in our performance in building them, but also in exploration to make them even larger. Today, I would say my attitude towards M&A right now is we're somewhat ambivalent because of our situation of what we have in the pipeline. I'm also disappointed. I'll explain why. Ambivalent in the sense that we've got a new resource coming out at the Anaconda area, part of which had been this disputed exploration claim, which is back. We've been drilling that extensively for years. We haven't put out any results. In the end of March, we're going to come out with a new resource in the Anaconda area, 20 kilometers north of Fekola. And that's, in our mind, we're anticipating to see another significant discovery in Mali, 20 kilometers away from an existing mine. So that has impact in the short term. We'll be trucking some more down starting later this year, early next year. But we think we'll end up building another mill there, most likely, in the Anaconda area. So the production profile of Fekola can continue to increase dramatically over time. Plus, we have the Gramalote situation where the feasibility study is going to be out early in the third quarter of this year. If it's a positive study, we will go ahead with our partner AGA, or if they decide they're not going to participate, we would look to take them out and drive on with that. That's another potential 400,000 ounces a year split between the 50-50 JV if they participate. There aren't many of those in the world today, so let's see what the economics show us. There's another tremendous amount of growth for us that we already own. So that's why we're not rushing around, especially with our shares being undervalued versus our peers. We're not desperate to do a deal. Ambivalence is where you want to be when you're trying to sell your house or whether you're trying to do gold mining deals. Ambivalence is a good thing. Disappointed is because of the fact that I've been on this for years. We did not want to sell Bema Gold to Kinross, but because we work for our shareholders, it's a public company, we never said for our own personal interest in trench management, let's deflect that. I never did, never would do that. Right now, there's a lot of companies here at this conference, there's some and elsewhere that are in trench management. They're not telling the shareholders the truth when the shareholders say, are you open to mergers? They said, oh, yes, we are. The reality of it is there's lots of people acting in self-interest. They're not acting on behalf of the shareholders. They work for their shareholders. Yet there's a lot of people that seem to think it's their own private company. It's not. So we need to help the institutions to get more M&A happening by making sure these people live up to their fiduciary duty. When you're director of a public company, your job is to take steps to increase shareholder value. Well, M&A is a good way to do it, but you have to be prepared to put your ego in your back pocket, as I did when we let Kinross. Well, we took it to our shareholders to see if they wanted Kinross to offer a 40% premium and $3.5 billion for Bema. Bad day for me. We did the right thing for the shareholders.
Has B2 Gold made approaches to companies and been rebuffed, and those people haven't told their shareholders that there was an approach from B2 Gold?
Absolutely. Both in development projects where a company maybe has a single asset, they're going to try and put together a construction team, which often doesn't end well. And also they're going to have to do some challenging financings that aren't in the best interest, in our opinion, of their shareholders, because they're stubbornly saying it's our baby and we're going to go and build it.
So at what point do you perhaps make a direct approach to the shareholders? I mean, this has happened recently in December in the royalty space. A company put out a press release direct to shareholders saying, look, we want to buy this company. Here's our offer. Think about it.
Well, I think that's coming shortly, and I'm pleased to see, and I'm having some good meetings with institutions here that are major shareholders of us. I know most of the other list of suspects, and they're starting to realize, partly because I'm telling them, you're not being told the truth here all the time. So we need to bring out the pressure onto these management groups to realize they actually, newsflash, work for their shareholders.
Yeah.
So I'll be naming names pretty soon if we don't see some progress in that regard, because the shareholders need to know.
Okay, let's put that in a slightly bigger context. B2 has consolidated its production, let's say, around 1 million ounces a year, with Fekola expansion or Anaconda in Mali and Gramalote coming on. What's the future stable run rate of B2 Gold? Is that closer to 1.5 million ounces a year?
Yeah, clearly. If we look at the potential for Gramalote plus the potential for Anaconda, north of Fekola, which could add significantly to the production profile, both of those, you could be in that kind of range. The other thing we're looking at now is mergers that make sense because of maybe synergies with another company. Maybe a company's faltered, their management hasn't been great, they haven't performed, the shareholders are unhappy. Those are deals right now that we're looking to do. There aren't many we like, but there's a few of those where so far up to date, we feel like we've been getting stonewalled by certain groups, where a production merger would make a ton of sense. That's frustrating, and I think that's the disappointment part. So hopefully people will step up and do what the right thing. The right thing is to represent the shareholders and do what's, it doesn't matter what a CEO wants, especially one who doesn't own any shares and is parachuted into a company. It doesn't matter what he wants. It's not his company. It matters what the shareholders want.
So you see more deals like Barrick Gold struck with Newmont in Nevada, more deals like that coming, more joint venture getting together like that coming to unlock value for everybody?
Perhaps, but we need less better run gold, less gold companies that are better run. And we're seeing some of that. We have. But there's too many companies. There's not enough good management groups or technical groups out there. The best way is simply M&A. And there's all sorts of packages in these companies these days. It's not as if the management of the board of directors are going to suffer if they do a name a deal. But we're also always looking for talent. We're not an arrogant company. Look what we've done around the world. The deals we've done with the high quality, talented people in those companies that we take over, and there are good people, a lot of them are still with us. The manager of the Fekola mine was the manager in the Philippines when we took over CJ Mining back in the day to acquire the Masbate mine. So we're looking for talent. We're not coming in and saying we're arrogant, everyone else go away. And, we're looking to build on talented people within the companies we merge with. So it's not a negative, it's a win-win, and it should be a win-win done properly for all shareholders.
We're in a situation where that sort of talent and that management is really going to earn its keep, so to speak, because we're in an inflationary environment. And in your 2021 financial results, you mentioned that during the first half of this year, you expect to see significant sort of cost escalation before that comes off again. Mm-hmm. Where do you see cost escalating most, and what are your sort of strategies to address that and minimize the impact of that?
Well, inflation is obviously a reality. I mean, go to the grocery store, go and fill your non-electric car with gas. There's no doubt inflation is something that's here and will be inflation for a while. The key is to identify the areas where it's going to affect you, try and mitigate where you can. We do some fuel hedging and things like that to try and mitigate that. But we are looking at probably 10% of our costs being higher this year because of inflation. And there's a few other mine scheduling changes that add a little bit to that as well. But at the end of the day, with our projections going forward for 2020, being around $1,000 an ounce to $1,100 an ounce, we are still a low cost producer, especially given the fact that we're debt free and able to pay this level of dividends. So that's the risk in the industry for sure. One of many is the inflationary trends. But once again, we've been doing this for a long time all over the world. There's ways to mitigate it in different countries in different ways. But the bottom line is have good enough projects that can withstand some inflation. And we have that clearly.
Okay, B2 Gold throughout its history, I think it'd be fair to say, has continued to surprise people by some of the directions and decisions that you've made that have been very, very successful. You've never been afraid of going to jurisdictions that are unpopular or other people fear to tread, and your exploration efforts continue that. You're in Finland, you're in Egypt and some other areas. Where do you see the sort of future ounces growth for the company?
Well, for 35 years in the history of being on B2 Gold, we've always said we want to be driven more by geology than geography. And that's a commitment. That doesn't mean we're going to go to Iran anytime soon or Iraq or whatever. But at the end of the day, we want our people to be safe. But we're looking for places, as you said, with a sphere to chest. Chile in 1988, Russia in 1998. Gold was 300 when we went to Russia and built a successful mine that led to one of the great discoveries in the world in the last 50 years. Contrarian thinking. Something I learned a long time ago, that if you're going to be contrarian, you're going to have critics. Because bold initiatives, by definition, are done by the few, not the many. That's why they're called bold initiatives. But if you get that right, then you're able to acquire projects like, Jacoto Mine, like Fekola, when no one else is buying them. You can do a fair deal for their shareholders, but you can do an accretive, a good deal. So the cheapest ounces will always be the ones you find. We found a lot of them. M&A, quality M&A, we tend to find additional ounces at those projects. Great success there, but also grassroots discoveries. In our industry, the few companies that are successful in exploration should never try and produce anything. It's a completely different business. They should be taken over by producers. But the producing gold mining companies are starting to realize they're not very good at exploration. They don't make, typically, grassroots world-class discoveries. I wanted to be both of that. We wanted to be even B2, and we are. We're still a very good exploration company, the same team under Tom Garrigan for 35 years. And we've always been committed to thinking outside the box. Zimbabwe, we're looking at now, but very, very little investment because it's a country that's got a lot of gold mineralization. Yes, there's issues where the government's got to let us sell gold to other country. That's a perfect BIMA B2 initiative. Egypt, same thing. Go to places where there's tremendous mineralization and spend a little money and work with the government and tell them what we've done around the world. And post-COVID, tell them the jobs we can bring, the revenue we can bring. I think it's a great opportunity here now in the world to show people mining is responsible, and look at COVID as the example. So we'll continue. We're drilling in Uzbekistan, Finland, soon in Japan, Zimbabwe. Why? Because that's the way we've grown in part, and because we can. Most producers are not good at exploration. They're not entrepreneurial. I'm a businessman. I'm an entrepreneur. We've been able to create a very respected gold mining company with all the discipline that requires. Part of the reason I'm still doing this after all this time is because we're entrepreneurial. And I think that's a unique company.
Okay, thank you, Clive. Final question. Assuming everything goes to plan, you get a bit of luck, where do you want to be at the end of 2022?
On the way to continuing growing the company with existing assets and hopefully some successful M&A that'll make sense to all of our shareholders. There's an opportunity to continue to grow here through exploration, existing assets, and M&A.
Excellent. Well, thank you very much for joining us today. Clive Johnson, President and CEO of B2Gold. Join us for more from Kitco at BMO Metals and Mining later on.
Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra,